Alrighty guys, welcome back to another video. I was about to hop into a little review, but I saw that our setup did form during the New York session today. So instead of doing the actual review that I was going to do, I just want to quickly show you all how you guys could have caught a monster fucking trade today using our, I'm going to call it our #1 setup, honestly, because this setup, every time I see it, this shit just pays fucking phenomenally well. It's really consistent. So I'm going to show you guys exactly how you could have caught a killer fucking trade today, trading this one simple setup. And yeah, this is like a bread and butter setup. So without further ado, let's go ahead and get into it. So we're here on NQ, the NASDAQ futures right here, you see up there. And I'm going to delete all of these drawings so that way we can start fresh and I can walk you guys through this whole trade framework. So let's go ahead and remove all these drawings. We're going to remove all the drawings on S&P as well. So we're on the NASDAQ. We're on the 5-minute chart. Now, ideally, you want to like start from a top-down analysis approach. So we're just going to go out to the daily real quick. Actually, we're going to go out to the weekly real quick. We're going to get in a couple important levels on our chart. So we come out to the weekly. We see we have these relative equal lows right here. We want to mark that out because that's kind of important. Okay. Overall, our analysis for the week was bearish. So by now, you would have had these already on your chart. This is a, this is a weekly low from all the way in December, as well as right here. This is a previous week low right here. So we can even just mark out this previous week low. We don't even have to mark out this low from December. But yeah, as a matter of fact, let's just do that. So let's just say you start on a daily chart, you see this low, you believe price is going to go down, take out this low. Great. Price does that. After we take out a low, what do we expect to happen? We expect price to go take out a high, right? So price takes out this low. What do we see here? Price come back for a high. I'm going to show you guys how you could have caught this move right here, this from low to high. So we come out here on the hourly chart, we see prices done nothing but trade down. So our bias is that we will see a retracement back into here. Do we have much of anything on this chart? Not really, but we do have this little 1 hour fair value gap right here. Now we did not trade into that today, but I would expect for us to trade into this sometime next week. We're going to drop a little bit lower. We're going to go to a 15-minute time frame from here. Okay. And I'm going to pay attention to the price action that has happened around the formation of that 1 hour fair value gap. First thing I'm going to note is the time. So what time was this fair value gap really formed? Well, if we look right here, 8:30, right? What do we have at 8:30? We had the NFP release. So this is our news candle that has created this fair value gap. Price tries to trade into it here. We do not, and we reject far away. Right, but what is this candle right here that tries to trade into this? Actually, we do trade into this 15-minute gap, but we just don't trade into the hourly gap. But we trade right here into this 15-minute gap because we're on a 15-minute time frame, right? So this is our 15-minute fair value gap. We trade into that, and then what happens? Price rejects, right? So this series of up-close candles before price rejects lower, before price expands lower like this is our order block. We're going to pay attention solely to this last 15-minute candle before this move down, and this is what we're going to refer to as our 15-minute order block. Okay, so this is our 15-minute order block low. We're going to add text to that. 15-minute order block low, and we want to move this to the right. And not only is it an order block, we want to be specific. It is a 15-minute bearish order block, or I simply mark it out with a negative sign. So 15-minute order block low there. And then right here, 15-minute order block high. So price drops down from here. When price is going to trade back, up, we're going to expect inefficiencies and PD arrays to be traded to on the upside when price is trading back up to here. So we also have this little 15-minute fair value gap that we could use as targets as well. But for right now, we're just going to focus on the order block. But I am just going to highlight this out real quick. Does price trade back into there? Yes, and if we pay attention right here, price gets there, stops before trading through it. So again, this forms at this point. We have this on our chart without even looking at anything to the right of this candle right here that takes out this low. We're going to be expecting this to be an order block because that's what it is. This is order block. Price quickly expanded away. This is where the orders were before price expanded away. So we're now going to drop into our lower time frames. At this point, we could drop straight to 1 minute, but we're going to look at a 5 minute real quick. Again, we come down to the 5 minute, and we're only going to be paying attention to the New York session, which starts here at 9:30. Okay. So this is our New York Open. What's happened since the New York Open? Price traded lower. We had this little retracement, lower. Okay. Now we're going to mark out a few key times. So the first macro we pay attention to is the 950 to 1010 macro. What happened during that macro? Price traded lower. After that macro, what happened? We came out higher. We're not going to pay attention to this macro now. Right? Because why would we not pay attention to this now? Price trade lower, price trade higher. Balanced price range. Right? From there, price could trade lower, break this low and continue lower, or we could trade back into it and then trade higher, which is what happened here. We're going to pay attention now to what happens between our lunch session. So from us, that is 11 a.m. up to 12:30. Right? And this is typically what I define as the New York lunch session. Now usually I do not trade this, but you can frame trades in this time if you know what to look for. So at this point, we're going to have to come over here to our E-mini futures chart, and we're going to do the same thing. We're going to mark out our important times, 9:30, and then the lunch session, 11 a.m. to 12:30. Okay. We're just going to make this chart look similar to our NASDAQ chart, as similar as we can get it. The price action is going to be a little bit different, and you will see that here soon when we begin to frame our trade. So again, here on ES, what has happened? 9:30 open, price traded lower, we retraced, and then we traded lower again. Okay. Now I'm going to flip between these two screens real quick, and you guys tell me, or not tell me, but see for yourself if you can already spot the SMT. If not, it's okay. We're going to take you into that now. So price is already within time that we're expecting something to happen. Something. Either lunch is going to continue the move lower, or it's going to retrace the move, or set up for a retracement of the daily range. So here in lunch, what happens on ES? This low here gets taken out right here. Okay. Over here on NQ, what happens? Does that 1010 low get taken out during the lunch session? No, it does not. Right? So there's our SMT. At this point, when we see this SMT form and price rally higher on this candle, and we take out this high, from here, when we take out this high, this is when we can begin looking for opportunities to long the market. Only after our SMT is formed, and if we want to go long, we want to see a high be taken out. Right here, our short-term high is taken out. We want to be paying attention to the bodies of the candles, not the wicks, right? So this candle body here takes out these candle bodies here. At this point, our SMT with ES is confirmed, and we can begin to look for long setups. Also, when this takes out this high, it confirms that this is our manipulation leg. Why is this the manipulation leg? Because this low was not taken out on NQ, while it was taken out over here on ES. That defines the SMT, which tells us where our manipulation is happening. So now that we've identified where the manipulation has happened, we can take our fib projection from the top of this candle, the close of this candle body, to the bottom of this candle, the close of this candle body, right? We project that out. Where do our projections take us? Well, if we look, this -3.5 projection is where? Right overlapping that 15-minute order block low. That is a strong confluence. We can expect that if price is going to rally higher, it has the probability to trade to this -3.5 standard deviation. But do we need it to trade all the way to that -3.5 standard deviation to have a good trade? No, not at all. Most times when we're looking for this setup, we only want to trade to the -1 to -1.5 standard deviations. Why do we do that? Because it's reliable. Very reliable. Okay? So we're going to drop down to our lower time frames, and I'm just going to make sure we're over here. We're going to drop down to our lower time frames, such as the 1 minute. We've already confirmed our SMT. We've already confirmed that this is our manipulation leg, and we've provided projections, aka targets, for where we think the market could trade to. Now we're on the 1 minute, and we want to, at this point, we just want to look for a solid entry. So here we see price rallies higher, takes out these highs. What happens when we take out a high or buy side liquidity? We expect the market to do what? Go seek sell side liquidity. So we have, what the fuck? Why is it not changing my shit? What the fuck? Okay. So this is buy side liquidity, aka buy stops. Fuck it, I'll leave it like that. So when we take out buy side liquidity, what do we expect to happen? We expect the market to seek out some form of sell side. So we've got some fair value gaps in here that we can expect the market to want to trade lower into. Does that happen? Yes, it does. But again, our sentiment is bullish. We are looking for buying opportunities because we have this SMT here. Because we see this SMT form so often, we are expecting that price is going to trade higher. Why? Because we see this shit so often. This is a setup we see often. We trust it at this point. We expect this to deliver. We expect this to hold. So we're just going to look for points where our trade idea would be invalidated. Where would our trade idea be invalidated? If this low right here that created our SMT were to break, right? We're going to use the wick of this candle here, and this becomes our rejection block. Ideally, we do not want to see price action break this wick low. Does that happen? No, not at all. You can buy these lows, and you'll be buying the absolute low of the move. Stop loss, fuck, you could put it 10 points below this low, honestly. But if you don't want to do that, if you just want to have a 1 point stop loss, you can fucking do that, but it's not smart. You could have a 10 point stop loss and you'll be just fine, right? It never trades lower, right? We can enter right here. Let's just say we enter right here at the top of this rejection block. We have a stop of just below. That's 17 points. So you can have a 20 point stop on this. Boom, like that. And you know, you never get taken out. You never get taken out. Shit, you could put it even lower. It could be 26 points. You risk $50 on this trade, right? It doesn't get taken out. That's the point. We're going to target first our -1 standard deviation. So before we get into that, I just want to show you guys how you would get, like, where I would enter on this trade. Like, yes, you could enter on this rejection block, but this is not where I would enter. So price leaves this rejection block. Again, we trade into it here. We create this fair value gap. And then after we create this fair value gap, what happens immediately? Price rallies higher. This creates an inverse fair value gap here, which also becomes a breakaway fair value gap. At this point, we do not want to see price trade back down into here. And then we have this fair value gap right above. Now I'd be trying to enter somewhere in here, either on this candle's expansion or within this little candle range right here. As long as I can enter close to this range, target these buy stops and target this -1 standard deviation, I know I'll have a solid trade. We don't have to enter precisely in this fair value gap, but around this fair value gap is where we want to enter, right? So if we're entering here at the top of this fair value gap and say, we don't want to see this fair value gap be traded to. So if we have our stop below here, just at the top of this rejection block, again, that's about a 32-point stop. You're risking about $60 or $600 if you're trading the fucking bigger contract. If you're trading the minis, if you're trading the micros, you're risking $60 to make. Again, our first target is going to be at this -1 standard deviation. So we're going to pull this right up to there. Let me take magnet mode off so I can pull it up. First target, -1 standard deviation. That's 87.5 points away. You're risking, $65 here to make. 87 times 2 is like what? 160 plus 15, 175. You're risking $65 to make $175, and that's just targeting this -1 standard deviation. Now, ideally on these setups, we want to target -1 standard deviation for our first TP, then -2 for our second TP, and then we can leave a runner, and that runner can run all the way up. We can allow that runner to run all the way up, all the way to the -4. -4 is where I usually terminate any of my trades that I would leave a runner on, right? So we target this -3.5 standard deviations. Why would we do that? Because that is where we can expect price to run to. Why would we expect price to run to there? Because this is where our 15-minute order block low is, right? So you're risking $65 here to make 238.5 points. If we multiply that by 2, I just don't feel like doing the math in my head right now, so we're going to pull up this calculator. That's 238.5. 238.5 times 2, $477 there. Or if you're trading the mini contracts versus the micro contracts, you'd multiply that by 20, $4,770. And that's just utilizing one contract and framing this trade off of SMT with knowledge of what price should be doing in a particular time. Hold on. So yeah, like I was saying, that's how you could have caught a monster fucking trade, just framing a trade using, SMT and standard deviation projection. This isn't even utilizing fucking OTE to capture, a precise entry. Now, if we were to use OTE, again, we'd be watching the 1 minute chart, and you don't have to use OTE. This is just something I use to get, more precise levels. We pull up OTE. We go from the bottom to the top of this run. This time I will actually use the wicks when I do this, when I use OTE projections. If we were to pull this out, it looks something like this. I'm only going to pull it out to right here. Get magnet mode off. Pull it out to right here, right? If we look where price is moving, again, we do not make a full retracement of this move, which is good for us. Pretty bullish. again, rally higher, price is trading. Again, OTE is offered here, that 705 to 709. We close right under here and then trade right back. We could probably even use this little leg here, and we might get a better projection. We go from this low to this high, and yeah, boom, right there. This low to this high. Where do we trade to? Right to the top of OTE right there. Perfectly to OTE right there. If you wanted to be super precise, you would have to do all of that in real time, but if you can see retrace to OTE. This is where you'd be entering. Boom, bottom tick of the move, shit goes right on, no real resistance, right through this acts as low resistance right here. There's not a bunch of fucking anything, so when this does go, we would expect it to just go ahead and cut through, which it does here. We get to the bottom of that 15-minute order block, right? What happens? We do not close inside of it. Bearish order flow steps in again. Unicorn model, boom, out. We get this little breaker right here. Breaker, fair value gap, breakaway gap, trades lower. Fair value gap here, trades into it, lower. And that's the end of the day. So yeah, you could have cut this move here, and then, you know, if you're really advanced, once you see this, enter short and just, you know, target this previous low, which it does tap there. This is where I was trading at the end of the day, right in here. Yeah, like right in here. When this candle broke, I thought maybe price would go ahead and run down there. I entered here. Went up like $150 quick, and I just cut the trade as soon as I saw like $150. Ended up filling me for 145, and then it went and ran, touched that. So yeah, that's that. That's how you could have done that shit. Again, SMT projection. You don't really need OTE, but if you want to get super precise, OTE helps. Why is this our rejection block? Why do we expect this not to break? Because this, if this were to break, then it would invalidate our SMT. So we expect that to hold, and it does. We get a banger trade out of it. Hope you guys enjoyed.